My people, what's good with you guys? 100 Years of Wealth, streamhomeloan.com. Thanks again for tapping back in. Want to give you guys some more mortgage information, some real estate information that you guys could definitely use. Hopefully, it helps you out. If it does, drop a like, a subscribe, help the channel continue to grow. So, I'm going to jump right into it. I tapped into this briefly in the last video that I posted, where I kind of asked myself the question, are these programs that we use regularly, like FHA, Fair Housing Administration, or Federal Housing Administration, or VA, these government-backed programs, are they going to go away? If you've been paying attention to the news, what you see is the Trump administration, particularly the DOGE Department of Government Efficiency, run by Elon Musk, has been taking a chainsaw, like he said, chainsaw to what they consider bureaucratic government department. So I guess the unofficial definition of bureaucracy or bureaucrat is basically a bunch of processes, paperwork, regulations, systems in place that kind of like make it more difficult for things to proceed through the government or things to be processed through the government. My opinion on that briefly is that I'm sure that there's a reality to that. I'm not sure if the way that they're going about it is an efficient or accurate or even honest way of approaching the issue or the problem. But the question is, these programs like the Federal Housing Administration, the Veteran Affairs, they um, they offer or they insure loans for individuals, and usually these loans have offered an expanded ability to qualify for a lot of people that weren't able to qualify under, let's say, conventional or conforming loan guidelines. So, brief background: the Federal Housing Administration, or a brief kind of like overview of what FHA does. So, when a borrower gets a loan, the lender will lend them the money on the loan. So, let's say that you have a house, it's worth $500,000. Someone wants to borrow money to purchase that home because they don't want to have to pay $500,000 directly out of their pocket in cash to buy that home, either because they don't have the money or they would rather keep money in their pocket. For most people, they don't have $500,000 sitting somewhere that they can just use to, they just don't have, most people just don't have that money sitting anywhere. So what people do is they look for options, either 100% financing, where they could say, okay, that home is $500,000. I'm going to get a loan for $500,000. That loan will then purchase that home, and then I'll have a monthly payment on that loan. So there's different types of loans. There's conventional loans, there's private money loans, there's FHA, VA, and all these different loans have different guidelines that are basically the parameters that are required in order to qualify for the loan. With FHA is a federally backed insurer. So meaning that, like, when a lender says, okay, we'll give you the loan for 500,000, the lender doesn't want to have to hope that for the next 30 years you make all your payments for them to make their money back. What a lot of lenders are going to do is they're going to sell that loan on the secondary market. They'll service some of it where they're receiving the actual payment and making a portion of that interest that's being paid, or making the interest that's being paid. But it's still a risky gamble for a lender to hope that, they'll make that money back plus their interest over a long period of time. So what they do is they lend to guidelines that are set by institutions that will then insure the loan. So with FHA, they say, okay, lenders, if you guys lend to these set of guidelines, meaning, hey, this person's credit score is a minimum of this, they're putting a minimum of this amount down, their income is documentable, et cetera, then we will insure you against default, assuming, let's say, one of those homeowners doesn't pay their mortgage, right? They're saying, if you adhere to these guidelines when you lend money, well, that'll be an FHA insured loan. We'll make a little money on the back end, but we'll also insure, or no, we'll make money on the front end when you pay our upfront insurance premium, upfront mortgage insurance premium, which is basically FHA's fee for doing the loan, along with their monthly insurance premium that's required. Um, when we do that transaction, we'll make money that way. But at the same time, if there was default, you are insured as a lender, so you don't have to pay back or take that full loss, right? So these programs have been around for a while. They've been helping clients because they offer expanded guidelines outside of your traditional guidelines. So let's just say your traditional guidelines allow for this amount of people to get into the market. FHA will open that up because it's going to allow people with a little bit lower credit scores, allow people with a little bit lower or higher debt to income ratio. It'll allow people to have, unique scenarios like, hey, look, your grandmother that doesn't live in the property with you, that might have some additional income she can throw on the transaction. She can be considered a non-occupant co-borrower. And I think that that's available on conventional as well now, but for a while, FHA was offering a lot of unique benefits, and it still does in a lot of ways, that conventional doesn't. So the question is are these programs going away? Because what you see is it seems like there's an attack from the Republican Party, and someone put in the comments, tell me if I'm wrong, I'm not trying to make this political, but it seems like there's an attack on what they considered entitlement or handouts, or a lot of times to me it's just things that seem to be picking up or creating an ability for certain groups that were left out to be included, right? It's not a handout. It's saying, hey, for many years these groups were excluded due to different reasons, whether it's discrimination in the workplace, discrimination in the housing market. We are expanding guidelines to now include different parties, and we're not making it to where, hey, if you don't have a 680 credit score, you can't qualify for a loan. Hey, we understand that different factors may have made it to where your credit score might be a slight bit lower. We're going to be a little bit more flexible because we're still seeing that people with a lower credit score make their mortgage payment, right? So these are how these loan programs came along. These are how these loan programs have been expanded. And it does seem like a lot of the things that this administration is chopping at are things that help out the middle class and lower income portion of our country, right? If you're wealthy, you're not really concerned with down payment assistance. You're not really concerned with higher debt to income ratio, having the ability to qualify. You're not concerned with putting a additional family member on the loan to assist in qualifying for the loan, right? So when you're making these cuts to programs like SNAP benefits, Medicaid, Medicare, it seems like there is a disconnect, or it seems like there's a bit of an attack on lower income uh, individuals. So when they started cutting jobs at the VA, at the HUD department, or the Department of HUD, Housing Urban Development, which oversees FHA, a lot of people start to become very concerned that these programs are going to start to go away. What I would say is, from the research that I'm reading, FHA is speaking out, stating that these programs are not in danger, that they will still be able to insure loans. My thoughts on that are that if you do pay attention to this administration, the things that they've been saying, what they've been pushing for many years prior to getting back in office, and then also what Republicans overall push, they usually aren't pushing things that come from the government that help people in the lower income middle class sections. They are usually looking at tax benefits for companies and wealthy individuals as their way to help the economy. And I think we all see that those benefits don't necessarily trickle down like they hope. So the things that do help are the ability for someone like myself in the past to purchase a home, to become a first-time home buyer. That puts you in a position to gain equity, puts you in a position to stop having to pay rent that continues to go up, and now you're paying a mortgage that there's tax benefits from it, there's equity gain from it, there's ability to turn that property into a future rental property and start to create some generational wealth that you can pass down. But it seems like they want to put a block on those programs, or on things that, I don't want to say directly on those programs, but on things that end up creating additional benefits for people that may have not been, you know, blessed with these benefits to start with, right? Like I said, if you're wealthy, you're not really concerned about the same things. You're not concerned about, um, the Department of Education going away because you pay for private school and private school is affordable for you, and you're not concerned with the local public school having enough funding, right? So that's how I look at a lot of these moves that they're making, and it does concern me. So I would say that if you are a person that could benefit from an FHA loan, a lower down payment, a benefit from down payment assistance. You don't have perfect credit. You could benefit from a lender being a little bit more flexible with credit. Then I would definitely say take advantage of what's available now, because we've seen programs completely disappear. A program that you're able to do 1 month, it's gone the next month, and your ability to purchase the home, if you were using that particular program, is gone. This happens. And with the rate and the pace that they are making cuts to jobs, departments, and the trend is removing things that were assisting people, Medicaid, Medicare, things like that. They've cut jobs at the VA, they've cut jobs at the Department of HUD, and then they've hired people back. It's real crazy and confusing, but that tells me that there's not much that you can really trust in the sense of like this will be here for a while. You would think there would be no question that you would ever wonder if VA loans would go away, or if you would ever wonder if FHA loans will go away. I would hope not. I would think that that would be crazy to do that, and I would think that there would be a lot of backlash and outrage, but they're doing a lot of things right now. And when you have someone like, let's say, Elon Musk that's making these decisions, he may know what FHA is, but being a South African multi-billionaire, does he understand the benefit of FHA? Can he see it from a perspective of someone that's trying to buy their first home and they need every bit of assistance that they can get, or their debt to income ratio might be a little bit high because of student loans? Are they seeing it from that perspective, or are they just seeing it from the perspective of the government's backing a loan program for people with lower credit or lower income? If they see it that way, then I'd be very nervous about this program, because even though that's not true, right? FHA works for loans up to $1 million plus, which should tell you that that's not for someone in a lower income or someone that's in poverty. But that person may need a little flexibility to qualify at that point, or they may be taking advantage of some sort of flexibility within that loan. Hey, look, my mom's going to live with me. Can I put this my mom on the loan transaction? That's not actually the scenario. I was thinking non-occupant co-borrower. You have a family member that doesn't live with you. Maybe they plan on moving with you in a couple of years, but right now they're not. That person can go on a loan and contribute income and help qualify, right? Like, that's, to me, that's not a handout. That's not an entitlement. That's not something that was unearned. That's just common sense lending and a common sense perspective on, providing financing for something that's definitely a life changer and a game changer for most people. So my point is that I would be very weary as you move forward if you plan on using an FHA program, an FH or a VA program. If you're looking for down payment assistance, if you're looking for closing cost assistance, these are all things that are, you know, provided by the lender but backed through some sort of program, whether it's government backed or some sort of local government backed. These things are at risk when you have, well, they're always at risk in the sense that litigation can change. Even a democratic administration could come in and say, hey, we're removing funding from this. So it doesn't necessarily have to be this administration is terrible, they're doing this or that, but it just doesn't seem like they're operating with any sort of like everyone's been using the term scalpel, where they're saying, hey, this doesn't work, let's remove this, or this is working, let's add funding to this, or hey, look, this doesn't create some sort of financial benefit for the country, but we're not a business and not everything has to create a dollar gain. It could be that, hey, look, we lose a little money here, but it improves the ability for a certain segment of the population to gain home ownership, that in turn reduces crime and reduce it, right? Like you got to think a few layers ahead as opposed to how they think. And it seems like they think from a very corporate capitalism standpoint of what's the profit and loss, incoming, outgoing. Hey, look, our income is going to keep coming, right? Like we're going to keep our incoming going. Let's just cut our outgoing, and then our spreadsheet looks better, right? Until shit hits the fan and planes are crashing and different departments that shouldn't have been cut are cut, and now you have a backlash and you have a higher expense and you have lawsuits that eat up those savings, right? Like you got to have a further how far you're looking, right? Like you got to have a bigger outlook and not just be thinking from such a short game perspective. So, with that being said, I would just say this. I hope that those programs don't change and stay available for many people to take advantage of, because I do see the benefit in FHA, VA, even conventional, obviously, but we're talking about FHA and VA because these are government insured, government backed programs. And a lot of the down payment assistance programs that we use are in some way, shape, or form getting funding from the federal government to run. Whether that funding is for the actual loan, a lot of times it's not. The funding might be for the institution to stay operating, right? While the actual loan funding will come from a lender. So there's layers to it, but my point is that these things do change, these things do go away. So what you want to do is take advantage of what's available now. Kenneth at streamhomeloan.com. You can email me with any questions. I can help you. I can pre-approve you for a loan. I can let you know what down payment assistance programs and what 100% financing programs are currently available that you qualify for. And that's pretty much it, my friends. Please like and subscribe, and leave a comment, leave a question, let me know any thoughts that you have, and we're gonna keep getting to it. But besides the programs, adjusting and changing, what I have seen is that the 10-year Treasury bond has dipped recently, so our rates have gotten a little bit better, and that's a good thing for the mortgage industry. I hope our rates can continue to get better without it having, or well, not it, but without there being some sort of major negative effect on the economy. Because usually, what you see is that the 10-year bond, which drives a lot of mortgage rates, that's dropping usually when the stock market isn't doing good. Stock market usually isn't doing good when there's a lot of volatility and a lot of crazy things going on in the market and regulations, and that's what's going on. And I think that that's what's driving the stock market down and our bond market to react and further, and also drop, which is a good thing for us. But it's like, if rates get better and our industry is doing better, that's good. But if the world around us is melting down, that's not good. So we want rates to get better, but we want a balanced, we want a balanced approach. We want rates to trickle down while inflation's not ticking up, right? We want rates to trickle down because inflation is staying low and employment is not shooting. Like unemployment is shooting through the roof, but unemployment is at sustainable levels, and job security is there and wage growth is there. We want positive things throughout. We don't want like a fucking depression on one side so that we can have a strong refinance market. That just doesn't work out for the long term. It doesn't work out for the population. um, we got to work together, my people. So look, once again, thanks for sticking with me. Share this with anyone that has any interest in knowing what's going on in the real estate mortgage market. Like, subscribe, comment. Be back with you in the future. You guys have a good day. Thank you.